Welcome to the Old Capital Real Estate Investing Podcast with Michael Becker and Paul Peebles. During this program, you will hear interviews with real-life successful investors who will share their stories and provide useful advice on how to acquire, finance, and operate apartment complexes. Now, here they are, Michael Becker and Paul Peebles.
Welcome to the Old Capital Real Estate Investing Podcast. I'm your host, Paul Peebles, National Underwriter for Old Capital. And joining me today would typically be Michael Becker, but Michael's out doing another due diligence assignment. He's actually closing another transaction this week, and so we wish the group at SPI great success. So in the podcast today, we have James Eng. James, how are you?
Great. Thanks for having me, Paul.
So we're going to do a coaching and counseling session with James Eng. This is one of my favorite new specials that we have in the podcast. We really try to drain James's brain. So James' brain gets drained. I love how that sounds, of great information of what's going on in the business and the industry right now. Before we get into coaching and counseling with James Eng, what's going on in the Old Capital world these days?
A couple things. Thursday, August 16th, I think you're taking the podcast on the road up to San Jose. So if you are in the Northern California area, definitely check that out. You can go to oldcapitalpodcast.com to register for that event. And then also the big event, the Old Capital Multifamily Conference on Thursday, September 13th here in DFW at the biggest place we could find, AT&T Stadium. We'll have 500-600 investors there and a keynote from Roger Staubach. So definitely go on to the Old Capital Podcast website and register for that event.
It is definitely the premier event in multifamily, and jump on a jet, come on down to Dallas. And again, mathematics is the same, whether it is 1 + 1 in Dallas and 1 + 1 in Detroit. You know, we're going to try to just give you kind of a general overview of how the business is across the country. We'll break it down by certain areas. Come on and join us and meet some of the high-quality people that are doing it in the Dallas-Fort Worth, South Texas, Central Texas, Southwest part of the United States. That is fantastic. So today, we are doing coaching and counseling with James Eng. And let's kind of talk a little bit about coaching and counseling. And James, tell us a little bit about the topic today.
The topic today is really, what questions should you ask your mortgage broker or lender before you choose them to be on your team? And so a lot of times before someone, let's say, buys a car, they go online, do some research, maybe go test drive a couple of these things and figure out, what they like, what's the features, all these types of things. The same way we want you to ask. We're going to go through 10 questions today on questions you should ask your lender/mortgage broker before you engage them.
We would love to be your mortgage broker, but we do a ton of business, and we love to do your business if you're thinking about buying a multifamily property, but we know sometimes it's just not realistic. So again, we're team players. We'd love to get your business, but if you don't want to use us, no worries, but we want to help you understand some of the questions that you should be asking up front to a commercial mortgage broker. So let's kind of talk a little bit about question number one, because we have 10 questions. What is your background?
And the reason behind this question is just to figure out sort of what they've done historically, and then what have they done that can possibly help you from your perspective. And so the easiest way for me to answer this one is typically my background at GE Capital as a loan underwriter, underwriting these deals, and then also the last 3 or 4 years investing in deals as a passive, but then also specializing in the multifamily space for the last 3 years and originating, over $350 million in multifamily loans, and finding someone who's a specialist in what they do. And so you do not want to just bring in someone that maybe has done some residential loans, they've maybe done some self-storage loans or office loans, and now they're taking a deal into Fannie Mae or Freddie Mac. And so you really want to understand their background and get to know them as a person and understand sort of how many different advantages that person has that can help you in the future.
Now, you were an underwriter for GE Capital, one of the largest commercial real estate companies in the world, or at least it used to be. What is the difference between being an underwriter and an originator?
So the originator brings in the loan and signs up the loan. But then for the next, let's say 30 to 60 days, somebody actually underwrites the loan. So what that meant was I went and did the site inspection. I underwrote the cash flows of the property. If it was an office, retail, multifamily deal, I would underwrite and review all the leases on the property and then submit that deal to our investment committee for loan approval. And so I got to sit there and go through deal by deal, detail by detail on how these deals actually got approved and what items came up from the credit risk side, and understood sort of how to mitigate those items, structuring different loan pieces and adding different features to loans. And so understanding how to present deals was my specialty.
So what are some of the key things that you want to hear that person on the other line say? That they were in banking for a long period of time, that they did single family, that they did apartment loans or construction loans. I mean, what are some of the things that you want to hear that person that you want to hire? What kind of background should they have?
I mean, the same way that, like say when you go out and hire an accountant and they have no real estate experience, you don't want to be the first one. Same way that you go to a doctor, you don't want to be the first test case. I think you want to see somebody with a track record in closing deals similar to what you are doing on your specific deal.
I mean, that kind of dovetails into question number 2 is how many loans have you closed in the last 12 months and what was the average deal size?
So you want to figure out how active this broker is in the market. So can they send you a list of deals that they closed in the last 12 months? You know, someone might say, well, I did 50 or $100 million in loans in the last 12 months, but maybe that was one transaction or one portfolio or a Class A building that they did or an office building that they just stumbled upon. I mean, you want to see someone who's maybe done, let's say you're looking for a deal anywhere from $5 to $10 million. You want to see someone that's probably done, let's say 10 deals at $5 million on average. So finding someone who's closed loans in line with what you're trying to accomplish. So far in 2018, I've closed about 22 loans and about 166 million. So on average, about $7 to $8 million on average deal size. So
is that above, below, medium to the industry, do you think?
I'm not sure. I mean, there's people who definitely specialize in the A and B space, and so they'll do less deals but higher deal size. But for what I see, the people that we represent are really individual investors, syndicators who are buying deals anywhere from 5 to 20 million. I think that's a good size for people to not only get professional management, but then also the best loan terms.
Yeah, because we specialize in B and C multifamily, just like what James is saying, is that you could have these brand new Class A 47, 55, $60 million transactions. And so they may have done 3, 4 of those in the entire year, and then doing the B and C stuff with the smaller loan amounts. It's more of a specialty. So James is more of a specialist when it comes to the product types that you want to invest in, that you want to buy, or you want to be a sponsor. So make sure that that person is in the B and C business. And also, too, that they deal with and want to deal with people that are doing their first transaction. So, again, the most difficult part, and a little bit of what our niche is going from 0 to 1. It's not that hard to do the 5, 6, 7 deal for somebody, but going from 0 to 1, you're going to need a little bit more hand-holding. Not everybody's going to want their hand held. But that's what we specialize in, is kind of bringing you up out of the ground. You know, we throw the seeds out. We talk a lot of folks. We treat everybody the same way. We don't know if you're going to do your first deal or you're going to do 10 deals. We treat everybody the same way. So we're here to make sure that you do it the correct way from the start, and then you don't lose money in the future. So question number 3, how many loans of this type, Fannie Mae, Freddie Mac, or bank, have you closed in the last, say, 12 months? Why is that an important question?
So every multifamily loan is slightly different. So when you go into Fannie Mae, there's certain rules and regulations and forms and processes compared to when you might even go into Freddie Mac. So even though you might have done a transaction or two, maybe on a bank recourse loan for your first deal, and now you're going up to Fannie Mae or
Right.
Freddie Mac, working with someone who understands these nuances and understands the timing in these transactions and the process. And so that I think is very important. So understanding how many deals that person's done with that particular type of loan is key.
I would say that doing what we do is very similar to having a Baskin Robbins 31 flavors ice cream store. Is that if you want to do business with us, we have all different flavors of loans, all different flavors of products, all different flavors of LTVs and approvals and the way that these transactions are done. If you walk into your local bank, the only thing they serve is vanilla ice cream or chocolate ice cream, whatever you like, vanilla ice cream. And if they can't get it done under their portfolio, their balance sheet, they typically don't have Fannie Mae and Freddie Mac have the ability. But with us, we have Tutti Frutti, and we have vanilla, and we have strawberry. We have all the different flavors of the rainbow dealing with that. So you want to deal with somebody that has different product types that are available so you can go in and out to see if that's the right decision. Because when we buy these deals, we want to make sure that our exit of the loan is right to what the investor's expectations are.
And then also having those multiple options, you can see the pros and cons, and we can give you sort of a list of, or just sort of a scenario, scenario A, B, and C, and figure out based on your exit strategy, which one is the best.
So number 4, when do I receive approval and lock the rate, and how long to close?
So your mortgage broker should know the entire loan process from day 1 to day 60 and sort of be able to see around corners for you. And so whether it's, Fannie Mae is probably going to float for 30 to 45 days before you lock the rate, compared to Freddie Mac on the small balance side, they can lock the rate up front. And then, bank recourse loan, they might get approval in the first 2 weeks, whereas Fannie and Freddie will be towards the end. So understanding sort of your timing throughout the transaction. And I think not getting distracted. I saw a video recently and they were saying, like, why is Nick Saban so consistently, the top coach in the top team? And he does not focus on just the championship game. Mm-hmm. He focuses on the process and the practice and the day-to-day stuff. And that's, as your mortgage broker, we work with you sort of step by step through the process, sort of day 1, day 2, and keep you focused on what needs to be done at that time. And so working with somebody who knows what needs to be done, in week 1, week 2, week 3, because a lot of lenders will just send you a big due diligence checklist and sort of throw it over the fence and say, good luck. We sort of give you a roadmap so that you know what you need to be focused on. And then in 45 days, you look up and your loan's approved.
Yeah, having a checklist or having a roadmap, just like James says, is very important. People who don't do this or don't do it very infrequent can be dangerous. Fannie Mae, Freddie Mac have different standards of when you are able to lock. On Fannie Mae, you'll be able to lock within the first 10 days. Freddie Mac small balance, you can lock on the application. A bank deal, you can lock on the application. How long is that lock good for? There's some basic questions that you have to make sure that you ask the loan officer about when do you think we can lock, because everybody kind of wants to lock as soon as possible. They want to take the risk off the table as soon as possible. And just like you wouldn't want to have a doctor that was infrequently working as an eye specialist, working on your eyes, you'd want to have the best of the best and people that kind of have been there, done that for a long period of time. So number 5, how many loans have you closed with this lender?
So once you get to the point where you choose your mortgage broker, but then also you choose the actual lender that you're going to be going with, it is important that that mortgage broker have a great relationship with that lender and has experience closing with them. And so whereas you might close maybe 1 or 2 deals a year, Old Capital, we might close 10 to 15 a quarter with that same lender. And so the ability to have us as the client along with yourself provides a lot of leverage in transactions when things might not always go right. And so everyone hopes to have a very smooth transaction and have no issues, but sometimes in underwriting, stuff comes up.
Yeah, people come to Old Capital or can come to a very experienced mortgage company to leverage their experience. I've closed 5,700 transactions over the last 35 years, so I have a little bit of experience. But just like what James is saying, is that you want to leverage our experience for your benefit. Like one of our lenders that we do business with, we've done over $1 billion worth of apartment loans. Do you think we have some leverage with that group? Do you think that they're going to try to bend over backwards if you're our client? That's what you want to find out, is how many loans has your mortgage broker that you choose, how many loans have they done with that group? So I think that's something that you have to ask. Next question is, how many first-time investors have you helped get a multifamily loan?
So I think this talks to your experience level and finding someone that is similar to you and have they helped them in the past. And so I think when you're looking at a mortgage broker, figuring out how much time they're going to spend with you on the front end of the transaction before you even have a deal under contract, and then figuring out once you're in the process, how much time they're going to actually, hold your hand and make sure that you get this loan approved. I think in the last 3 months, I've done about 6 deals with first-time investors. And so they're going to have different questions, and you're going to have different things that you need to be walked through and understood. And so that's one of the things that we help a lot of investors with. And so if that is a situation that you're in, definitely feel free to reach out.
We definitely had value added. I talked with a first-time multifamily buyer that was based out of San Jose, California yesterday, looking to buy a property in Atlanta, 40-unit building, never has bought an apartment building, wants to kind of figure out how it works. I looked at the offering memorandum that the seller had built. They had found this property on LoopNet, and I kind of walked through it. It looks like that it's in a flight zone for Hartsfield down in Atlanta. The planes fly right over your building. Is there any concerns with that? How old is this building? Is it a chiller property? Have you had a management company take a look at the financials on the deal? And so a first-time buyer is different from the person who's done it 4 or 5 times. So you want to make sure that you're talking to a loan officer who works with the first-time people that are asking the questions that are kind of trying to protect you or just trying to raise a question in your mind. I need to find out more information of things that maybe Paul or James or any of the folks of the Old Capital crew are asking, just to make sure I understand how this transaction works.
Yeah, and especially deals here in Texas right now, there's a lot of earnest money going hard day one. And so you want to make sure that, number one, that you structure the deal and sponsorship group up front correctly, making sure that the loan officer is reviewing based on your experience. If you are a first time, what's the correct loan product for you to be going into?
James, have I told you how much I enjoy the coaching and counseling sessions with James Eng? These are great. Question number 7, what happens if your loan is declined? What is plan B? And what issues have you had on previous loans just like this?
So this one is, similar to ice cream shop story, is if you walk into a bank and go direct to the lender, they might have one flavor. And if that flavor doesn't work for you, if vanilla is not going to work for you, then it is hard to change in the middle of the transaction. And so one of the key benefits of working with a mortgage broker like Old Capital is the ability to pick the correct lender from the beginning. But sometimes there are things that are outside of anyone's control, whether it's an environmental issue, whether it's the change in occupancy of a property when you're under contract. So a great mortgage broker will be able to take that deal, pick it up, and get the deal closed. So one example that I like to use is that we had a deal in Houston and the buyer took it into Freddie Mac, and Freddie Mac just could not get the deal done. And then they came to us essentially with 15 to 20 days left in the transaction. And we were able to choose the correct horse first, correct lender at the very beginning, and make sure that it made it to the finish line. And so having multiple options on these loans, especially when, plan A doesn't work, is key. Another thing is having the relationship built already. And so we already had a relationship with a bank that could come in and close that transaction very quickly. Whereas maybe it's your first, second, or third deal, and you've only done Fannie Mae or Freddie Mac. Now Now, who do you have to come in and close the transaction when your earnest money is at risk?
No, we don't have a problem picking up somebody else's transaction that they worked on that's failed. We prefer not to do that.
Sure.
But, our importance is picking the right horse right at the beginning of the race. So think of all those horses in the Preakness or in the Kentucky Derby. We picked the right horse right from the beginning, and we've been successful at that for a long period of time. But just like James says, sometimes there's a stumble on that horse, and you're going to have to shift that jockey, you the borrower, from the broken horse to a horse that can finish the race. That's an important thing is making sure that you can switch or pivot from one transaction to the other, because if you have $300,000-$400,000 at risk, you do not want to be the losing horse in that race. 8, what do you charge? When is it paid? Is it contingent on closing the loan?
So a lot of people will ask, well, you're doing all this work. Do I ever have to pay you? And at some point, yes, you do have to pay us. So
we hope.
At close, we will charge you. Typically, we charge 1% of the loan amount at close. And so this is contingent on closing the loan. So we don't make you sign any exclusive agreement that you're going to use us. We don't charge you if you do not close. And so I would be careful when you're talking with other mortgage brokers. We've run into issues where they're having them sign an exclusive agreement with that mortgage broker. And then whether or not the deal closes, they're still paying them. So be careful of signing anything along those lines.
So why don't we have people sign exclusive agreements with us? What's the thinking behind that?
I mean, to me, I want to be paid when I can actually close the loan and find the best lender for the transaction. I think a lot of times until you have a loan application in with a lender, some lenders actually will request that you not file multiple loan applications. But we are not going to make you sign anything up front that says we are the exclusive mortgage broker on the deal.
Our thinking really was, and we've done this for, about 10 or 12 years, is that there's no exclusivity agreement that we have. We call it a success fee. If we're successful doing the transaction, you're going to pay us because you're going to have, actually, this loan's going to close. But we want to do business with people that want to do business with us, and I don't want to put handcuffs on somebody. That just like what James was saying is that somebody had to sign an exclusivity agreement on a deal that that loan officer couldn't get it done. They brought it to us. We didn't have them sign an exclusivity agreement. We got it closed. And then that borrower had to go back and pay the person who wasn't able to do it a fee to get it done. And that fee wasn't like $1,000. It was like $17,000, $18,000. It was absolutely ridiculous. So reward us on success. We'll reward you in getting the transaction done. So I've never been really big, and our group has never been big on exclusivity agreements. That's just the way we operate. Number 9, can you provide 3 referrals from your current clients?
So this is interesting, is that a lot of people will do transactions with somebody and the deal will close. But if you ask them the question, would they recommend working with this mortgage broker again? And see what they answer to that. So is the mortgage broker able to provide references, testimonials? Do you see anything when you do some research on them, whether it's on LinkedIn or their website? Do they have any testimonials about deals that they have closed? And then will they give you 1 or 2 people for them to reach out to and ask them about their experience working with this person? And I think that is a strong, the same way that before you go to a doctor, you might get a couple referrals. I think the same way you choose a mortgage broker is call a couple of their clients and ask them, how is it working with this person? I think that will provide a lot of light on how to choose one.
So it comes down, bottom line comes down to execution certainty. And you want to make sure that, you don't cut your own hair typically. You don't work on your own cars typically. You're not a dentist to work on your own teeth typically, but you could do it all. You could work on your car if you wanted to, but that's not what you do. And so you're looking for somebody that has execution certainty, that's done this 1 or 2 or 10 times or even 1,000 times, that this is what they do to help you. They're the value added piece in the transaction. But also too, you want to figure out who you can work with, somebody that has a good reputation out there. We try to push out transactions that we've closed on our weekly constant contact blast out there. If we showed you all the transactions that we close, you'd turn us off and say that these guys are just bragging. But we choose selected transaction to push out on a weekly basis for you guys to take a look. If you find a transaction that you thought was interesting, call us. We'll have you go talk with the person directly and see how we did for them. If they would recommend us again, we're kind of an open book. We want you to be an open book when we talk about doing the financing. We want to be an open book too in these transactions. So number 10, the final number 10, James. So how can you help me as an investor besides the debt?
I think this is becoming more and more apparent. So there's a lot of lenders in the space that essentially you go to them and they provide you the debt quote and they close the deal and that's it. And so what I think is a little bit different about us is the platform that we've created, not only with this podcast, but then also our Facebook page, our conference, the webinars, and the ability to elevate you as a general partner in front of different audiences that you might not have exposure to. But then I love this highlight from our conference last year is that it might propel you to more deals and more transactions and more equity investors. And that platform is giving people that ability. So whether someone hears you on our podcast and wants to invest in your deal, or they see you at our conference, or they see you at one of our lunch and learns, the ability for somebody to get to know you and build your brand. And so I don't think many lenders are doing what we do.
No way.
No. And so the platform we've built and being a part of our team, I think, is a key in differentiating yourself. And so, we specialize in multifamily debt and we do a ton of it, but then also we'll help you with the debt and navigate that process, but then also help you find more deals and then also help you on meeting new potential investors. And so I think that's one of the key things that separate us from other lenders in the space. And
so I'll also say, we'll help you find more deals. There's no doubt about that. But we'll also help you avoid deals. I think the reason why people call me the godfather of multifamily in the Dallas-Fort Worth area is because just like the Godfather in the movie The Godfather, he knew where all the bodies are buried. And I kind of know where the areas where you should be investing and you should not be investing. There's a lot of people that come from out of state. There are people that are kind of new to the multifamily and they don't really understand that in the last crash in 2008, 2009, 2010, how was that done? Why did that happen? Was it similar to the single family? What happened in multifamily? What areas got hit the worst? What areas has not have price appreciation? One of the things that Michael Becker says is rule number 1, don't invest in the hood where you think that the prices are low and you're probably somebody that's from out of state. It's probably low for people here in Dallas, but it probably should sell for even lower if you really knew what that area was that property was in. So don't get head faked with an area or an offering memorandum that comes out that says that, property's worth $40,000 a door in a true market that's $85,000 or $90,000 a door, and you're thinking, well, I'm the only person that saw that. I want to jump on that. Make sure you call James or myself or any of the team members at Old Capital and kind of figure out whether it's Dallas, Fort Worth, Austin, San Antonio, or even Houston. James is from Houston. We can tell you whether it's an area that we would support you in. Customer wants a green suit. If you want to do the deal, we're here to kind of help you figure out and mitigate some of the risks up front.
So whether it's equity or key principles or introducing you to listing brokers or even sellers of deals, we do a little bit of it all. So definitely reach out to us and we'll help you figure out the debt on the deal, but then also leverage our platform.
Fantastic. Any other words of wisdom, James, or is that pretty much it for our coaching and counseling with James Eng?
No, I think what I end it with is definitely ask these questions up front so you know what you're getting into. And then a lot of times people only look at a term sheet on one side and a term sheet on the other side. And they say, well, term sheet B is 1 basis point lower or 2 basis points lower, and we're going with term sheet B. but they forget all the other aspects of choosing a mortgage broker to be a part of their team. And so ask these questions. And if the mortgage broker won't answer these questions, then you got your answer.
Some great information. Again, we love to be your debt person, your advocate. But again, we're completely transparent. If you get into a transaction, you need some help or some advice with another mortgage broker, mortgage banker, just give us a call. We're here to help you. I mean, we're passionate about what we do. And so, we'll still help you if you still need some advice of what we would do if the roles were reversed. So make sure you give us a call at Old Capital. But again, some great information from Coaching and Counseling with James Zhang, a great new segment on the Old Capital podcast. And I'm Paul Peebles. Have a great day.
Thanks for listening to the Old Capital Real Estate Investing Podcast. Please join us at oldcapitalpodcast.com to sign up for our weekly email updates. We'll see you next week for another great interview.